Wow, guys. Wow. What a week. What a week. I hope you guys had a wonderful week. Hope you guys enjoyed your weekend. So, once again, we're going to go ahead and get straight into it. We're going to go ahead and take a look at the quarter ahead today. We just finished doing our weekly Sunday night webinar. We just finished covering our quad witching expirations to let you know how to prepare for these things. Last Friday was quad witching, so we were covering what happens after we tend to have a quadruple witching expirations. So if you missed it, go ahead and click the links below. Make sure you don't miss the next one. So let's go ahead and take a look at this chart real quick before we move on to the actual chart. And tell me, what do you see? So if you're looking at this chart, look at these levels up here and where we are now compared to where we were last year, right after this date. So September the 21st, September the 20th. Look at what happened next. And look at the drop that followed, okay? Look at the level. It's really what's important here. It's not so much, the date as much as it is this level here, guys. Pay attention to this. Boom. Look at that. Look at where we are right now. And that's the most important part that we're looking at when we're looking at this chart. It's like, oh, okay, so we're back pretty much at the same level we were last year. Give it a few days earlier, a few days sooner, but the pattern still holds. So let's go ahead and take a look at the charts and see what we can find there. Let's go over to our charts. All right, taking a look at the charts, guys. Let's go ahead and take a look at the Dow. I like the Dow futures, just because it's just easier to track volume wise in the morning and everything like that. And again, its moves are a little bit more exaggerated because it has less stuff in it to pretty much determine its moves. So it kind of gives you these more exaggerated moves, which is kind of nice because it kind of gives you that exaggerated move. So you know that the markets are pretty correlated with each other. So if this one is moving this much, so are the others. And we'll take a look at the E-minis as well. But I wanted to take a look at this one first because I wanted to point some key things out that I'm noticing here. So let's just taking a look at the daily. Once again, we're looking at that key level that is basically where we were last year on October the 3rd and where we are now going into September the 23rd, guys. Okay, so look at that level right there. I mean, if you don't consider that to be a level of significance right now, I don't know what you're looking at, but that is something I'm paying attention to closely because obviously there is something at this level that signifies a lot of support and or resistance. So we may get something happening here soon. So looking at the quarter ahead, looking at the days and weeks ahead, this is something I'm definitely paying attention to, okay? So now, I'm also looking at this chart and I'm noticing a couple other things. You know what I mean? We have double top, kind of almost looks like it's building its head and shoulders here. So we have a lot of things going on here. But besides just this chart on the daily, I wanted to take a look at the longer term picture. So let's go ahead and take a look. Let's zoom out a little bit here and let's take a look at what else is available. What are the charts really telling us that's going on? What's upcoming? What's coming next? Okay. So what's coming next? So we have that major key level there, as you guys can see there. So this is the weekly. And again, that level lines up pretty nicely with the weekly as well. And what do you see here? Well, from one thing I'm noticing here is going back to January of 18, look at the RSI. This is the standard RSI. I don't trade with this RSI at 14. I like to use the 4 period. But look at the RSI up here. Again, at this level, pretty much the same level, guys. Look at how high the RSI was. But every time it's come back to that level, it's going lower and lower. And even when it broke even higher, yet even lower. So that's, I don't know about you, but that to me is some significant divergence as far as that is concerned. That move lower, that trend lower on the RSI, telling us something is going on behind the scenes that you may not be paying attention to. Okay, so that's something I'm looking at here clearly. So when we broke higher compared to this level here, we obviously the RSI is moving lower. So you can see here to here, just a year later, September to September, or July. September to July, we're going lower, and then from July to September, we're going even lower, even though we hit the same top. Okay, so we didn't get a double top on the RSI. We got some slight divergence on the negative side here when these made the same high, hit the same resistance level here. So as you can see here, okay. But what's more interesting, I like, is going even a little bit further. Let's go ahead and take a look at the monthly, and then we'll take a look at the quarterly again. All right, what do we see here? All right, same thing. High, low, as we're going higher. We went even higher again up here, and we're continuing to go lower. So again, all right, there's something going on here at this level. You guys see that line right there? There's something going on at this level here, guys. Okay, so then let's go ahead and check one more time frame here. Let's go ahead and take a look at the quarter. Oh, actually, options expiration. Sorry, let's take a look at the options expiration. One more thing, same level. Okay, see that? All right, so that's what I'm paying attention to here, because now I'm thinking, okay, something is going to go on here where we may actually end up breaking down nicely, and if we don't, we may get a nice rally from this point here. Okay, and like we say, I don't know if you follow us, have been following us for a while, but we prepare for both sides. I'm not going to be overly bearish. I'm not going to be overly bullish. I'm just going to prepare for both sides. You know what? Because it's better to have a plan and not be overly optimistic for one specific side and then get the complete opposite side. You know, forcing yourself to get stuck in a position that's not working. You know, it just doesn't make sense to get stuck in something that's not working, guys. If you're wrong, just admit that you're wrong, and that's all it is. You know. So again, once again, look at this. You know, RSI, look at this level here. RSI is high, RSI is low, even though we're making higher moves higher. So now let's take a look. Let's zoom in here. And now if you take a quick look here, look at this pattern here that we're forming here. There's doji, failed, you know, this little death cross. I mean, this looks like a cross here to me. I mean, this thing just saying, hey, man, I'm either going to break down or I'm going to break out. So looking at this pattern here at this level is letting me know that, hey, maybe we don't have the juice to continue to go higher unless the Fed or somebody starts pumping funds into the markets or something. You know what I mean? There's so many news articles out there, guys, that you guys can follow and just do your own research. Anything can happen, and which is why we prepare for both sides. I'm not going to be overly bearish or overly bullish to any one direction, but I am going to prepare based on what I see, and that is the right edge of the chart. And based on what I'm seeing, I'm just going to plan accordingly just so that I know, okay, this is what could happen if it goes this way. This is what could happen if it goes this way. And that's all. Okay, I'm not just going to plan for one side and then it goes the opposite way and then I get screwed. So that's going to be a key area to keep paying attention to, guys. So just pay attention to these levels as you're doing your homework here, because the quarter ahead is going to be an interesting quarter as volatility starts to pick up. So you see the VIX had a nice little run on Friday. So we had a quadruple witching Friday on Friday, okay? And it was an awesome day. I don't know what you were trading, but if you traded Amazon, you should have had a good day, okay? So now looking at the E-minis, again, let's start with the quarter. Look at the pattern, same pattern, okay, guys? Again, look at the RSI. RSI here is higher. RSI here is lower, even though we made a higher top. Again, what do you call that? You call that negative divergence, okay? So when the markets head higher, but the RSI heads lower, you call that negative divergence. So if this line would draw here for me, there you go. Boom. So again, we got the markets going higher. You got the RSI going lower. So now that's the quarter, and I love that the pattern is being formed on a much higher time frame, because now if we get something like this, you know, the markets may make one last ditch attempt to push a little bit higher, basically to the highs of the market, you know, 30.29, 30.18 area level, okay? Kind of like what you see here. You see the markets try to push higher, then they fail, you know? Same thing you saw here in October of 2018. Very small little wick here. You see that little baby wick there. Tried, but it ultimately failed, and obviously that was a nice failure if you were writing this down. All the way down until December, when it decided to turn around. And you can see here at the end of December, December 21st, started to pull back, going into the nice rally that we see here for the last 3 quarters, as you can see here, looking very nicely. Now let's go back down to the monthly, and let's see what these look like. Okay, so looking at the monthlies, again, nice little pattern here. Now failing to break these top levels here. RSI, once again, same process, going lower and lower as the market keeps pushing higher and higher. So again, guys, pay attention. This is the stuff right here that's going to help you plan for success. If you want to make a decent return on your investment, your trades, this is what you have to be paying attention. Pay attention to the long time frame. See what the market is really doing so you don't get caught by surprise, okay? So pay attention to all of this stuff here. So now the monthly is telling us the same story. This is, the E-mini is pretty much looking exactly the same as the Dow was looking. So now again, let's go ahead and take a look. October of last year, boom. Here we go, September. January, here we go. September makes the high. October tries again and fails, and then we get this massive drop. Again, let's take a look at this level here. Key levels right here, boom. So key level here lines up perfectly with this range that we were stuck in for quite a while a few weeks back, as you can see here. So now, when we break down from here, because obviously we're a little bit higher, but again, you saw that this is causing some negative divergence on the weekly, monthlies, on the monthlies and quarterlies. So now, when you're looking at the weeklies, and let's go ahead and zoom out a little bit more, just so we can see clearly. Let's see. Okay, so as you can see here, we're going higher. Again, here it is. Went high, RSI went really high, and it's failing to come back to those levels, even as the market keeps going higher. So now we're keeping an eye on this level here on the E-minis. On the Dow, I already showed you what that level was. I like looking at the Dow because it's just a little easier. It actually lines up a little nicer. So it's just, I kind of like to see what I'm looking at here. And this is pretty interesting, guys, because now, once we come back to this support level here, if we break through this support level, and as you can see, this is a strong support level on the monthly, the weekly, the quarterlies, this is going to make a big difference here, and we may get a repeat of what we saw last year, right around this time. Again, as the volatility starts to increase, the markets are going to start moving. So you better be prepared. You got to start planning ahead for what is upcoming, because you don't know. You want to be ready for anything, so just prepare. Let's prepare for both sides. So now, what can we expect? Can we expect it to come back to this level and bounce? Because now resistance turns into support once we're above it, correct? So now let's see. Or are we going to get a repeat of this here? Boom, broke down right through it, guys. Right through it to the second level of support. That was the bottom of this range here. So again, what does it like to do? We want to look at the history and see. Last time we came to this support level, it completely blew right past it. It didn't even think about it twice. Okay? So last time we came up to this level up here, okay? So we came up here, and it broke through it. The first time it came up to this level and came back, the support was strong. But now, like anything, let's say you're throwing a rock. You can throw a rock from 3 feet and may not break the glass, but if you throw the rock from 20 feet, it's definitely going to break that glass. So this is what we're looking at here. That's the kind of scenario we're looking at here. So again, you want to be prepared. Again, but this is the reason why we prepare for both sides, guys. Look at this candle here. Okay? Look at where this thing opened for that day. Look at where it finished. But did you really want to get into this trade here? Right, all this thing all the way up here. Is your account strong enough? Are you mentally strong enough to hold through a pullback like this? Are you smart enough to predict that the market is not going to blow through this high here and keep going higher? You know what I mean? Do you have a magic ball? Do you have some inside information that's going to tell you, hey, when you open this position here, let's say you buy some puts and you buy right in the morning, you buy some puts on anything. Let's say Amazon, Nvidia, or anything that's highly correlated with the markets, and you buy some puts right at the open, and the market goes completely berserk and starts rallying like crazy all morning long, and it's pretty much right up here. Do you have the nerve to hold, your account? And because a lot of people, like to go crazy and they over leverage and they buy too much or they go a little too heavy. But when you're looking at this position and this thing is pretty much about to engulf the prior day's candle. So this thing went from 29.73 all the way to 3,000. I mean, do you have the nerve to know that this thing is going to come back? And that's what you got to ask yourself. So you plan for both sides. Like, you know what? If it does this, I want to go long. And when it gets here, maybe I want to go short. But, for you to be buying puts just because you think it's going to drop from here, all of a sudden it's going to go back down here. That's cool, but that's depends if you gave yourself the time also for it to play out. If you bought same week expiration puts, for example, did you really give yourself enough time for this to play out? And I'm not saying that you're wrong, or that you may not be wrong or be right or whatever. But the thing is, do you really want to stand a whole day watching your account get drawn down this much? Think about it. And just apply this to any stock, to any chart. You know what I mean? I'm just giving you an example here because this is the stuff that you forget to pay attention to. Because it looks cool when you say, oh, yeah, cool, man. I got in here and I took my money all the way down here. It's cool to see that after the fact. But what were you doing when this thing was going against you? Were you adding to a losing position? Did you get in at the very bottom? You know what I mean? And like, what did you do? Because this is what matters here. The execution is what matters. You know what I mean? And we plan for both sides for a reason, because we don't want to get caught on a reversal like this. Because you know what? We don't know that it's going to stop here. We plan for it because we see, obviously, that there is strong resistance here. Obviously, hint, hint, there is resistance there. But we can't guarantee that is what it's going to do if we entered here. You know what I mean? Maybe we plan to get in up here on the puts, right? So this is what you have to prepare for. You have to prepare for both sides because you just don't know. I definitely don't want to get in at the bottom here when it opens, let that thing rally against me and watch my account get drawn down hundreds or thousands and thousands of dollars. You know what I mean? It just sucks. Nobody wants to see that. You know what I mean? Ideally, what you want to do is obviously buy calls in the morning because it fits the plan, and say it broke the box, it went the right direction, it's doing exactly as you're saying, you get out at your targets, and then you play it the opposite direction and you buy some puts and you go. And now you short it and you buy and you hold this thing for a couple of days because, hey, that's what the plan calls for. So that's what we're looking at here, guys. You want to plan for the correct moves at the correct time, because you know what? You don't want to get into a position and get screwed because you bought it and now the market looks like it's going to rally, and then you just happen to close it at the very top. Okay, so it's important to plan, to look at everything. Look out at the history. How do things like to behave? How do the stocks you like to trade like to behave? Okay, pay attention to all that stuff because it makes a big difference and it matters. Okay, so last thing I wanted to cover here is the VIX. All right, let's take a look at the VIX. Now, the VIX is back down to this low range here. I was expecting it to come back down here before we got this push higher. So I'm watching it closely because it may still do that. So I'm still watching. I don't know. I was expecting it to come back down to these levels here. You can see my alert before we started to get this push like this. But, I mean, the time is near. I mean, September the 21st. Was when the market started to set their highs last year. So we may start to get these pushes like we were getting last year now. So now looking at the VIX last year, look at this. All right, so we're back at these same levels here, but I was really expecting it to do this. This is why. Okay, let me just zoom out a little bit more so you guys can see. Let's do 2 years. All right, so last year we actually made it back down to these levels here. So September the 2019th, okay, this is where we were, back at these levels right before it boom and shot up. So that's what I was expecting. So I got my alert set down there because I was expecting the markets to make one last push. I wanted the VIX to hit here, but obviously I'm not going to fight the markets. If the markets want to tell me they want to come down, that's what I'm doing, okay? And when the VIX moves fast, okay? So we're preparing for this move now, because this is what it's indicating now. We have this basically engulfing candle here, and if the next week's VIX starts to continue this rally, then obviously we have a strong signal that we may get a similar move to what we got last year between October and December. So that's what we're looking at here, okay? So that's the VIX. So that's what we're looking at there. And then once again, guys, just apply it to the stocks that you like to trade. If you like to trade Amazon, take a look at Amazon, okay? What did Amazon do? Let's go ahead and zoom out on Amazon. All right, last year, September, Amazon set its high around September the 4th. This year, Amazon set its high, hint, hint, look at that level. all right, around July. So what do we have? We just have a slight move to the left, all right? Double top last year. This year we didn't quite get a double top, but what do you see here? Head and shoulders type of formation here with failure to actually form it looks like a sluggish little shoulder here, but Amazon's looking a little sluggish here. It doesn't seem to have too much juice. Again, look at the divergence in the RSI as the markets move higher. Look at the RSI. So once again, guys, this is key. Pay attention to what's going on. Pay attention because it's going to help you make better decisions. And what is going on with my lines here? All right, look at this. Higher as the RSI starts to move lower. Okay, so pay attention, guys. So now that's that. And this finished this year in July. And since then, it's been going lower. Now, the markets tried to make one last attempt. The markets went higher, but Amazon actually did not do the same. So you saw the markets actually went back to their highs, but the Amazon did not. So Amazon and the FANG stocks did not have the juice to actually go high with the markets, which is indicating weakness because obviously the money is not flowing into Amazon. So that may indicate a problem. It's like, hey man, this is like one of the top companies around the world, and big bankers and people with a lot of money obviously are not putting their money to work on this to make this puppy go higher. So obviously something's going on here because this is like, if you're going to put your money to work, Amazon is the place to put it, no? At least that's what it would appears to be, right? So now, this is not what Amazon is indicating to us. As you can see here, Amazon has been stuck in this little range here. Let's go ahead and draw a little rectangle here. Amazon's been stuck in this range here, okay? And now that Amazon's stuck in this range, you can see here, tried to break out of it, failed twice, a little double top there. And now what is it doing? It's heading back lower. Once Amazon breaks down here, it could break down very, very nicely like it did last year and hit to the lows of $1,300 So now, as you can see here, guys, this is what I'm looking at. This is everything we're looking at. Look at your same stocks, the stocks that you like to trade, and plan ahead, guys. There's a lot of action coming up. A lot of action is coming up, so don't miss out. If you need help, you don't know how to get into your stocks, you don't know how to enter, exit, manage, you don't have a community to trade with, go ahead and click the links below, guys. That's what we're here for. We're helping everybody do better by properly managing and knowing how to execute. Execution is key. It doesn't matter if you can pick a stock. Anybody can pick a stock. Anybody. I can guarantee you can turn on your phone, pick a stock, put on a trade, and make some quick money. That's not the issue people have. The issue is execution. Everybody can pick a stock and win. Most of people actually pick a stock and win. That's why most people actually get into trading, because you see how easy it was to make a quick, 20, 50, $100, and you're like, oh my God, that was so easy. Let me do that again. And you go ahead and you do it again. Oh my God, that was so easy. Let me do it again. And you do it again and you do it again until what? You follow it all the way to the top. Boom! And then it crashes on you and you lose everything you made and then some, guys. Execution is key, and understanding things like the market internals are going to help you make better decisions, okay? So anyway, guys, that's all I have for today. I hope you guys enjoyed this video. Good luck tomorrow. Have an awesome trading week, and I will see you guys on the next one.